let's discuss the afternoon update of what financial markets are doing. So currency pairs, let's talk about currency pairs. So Bank of America has revised its Q4 economic growth forecast down from 2.3% to 1.8% and raised inflation expectations with the core PCE price index likely reaching 3% year on year in the second half of 2025. With rising inflation risk, they expect the Fed to maintain its pause on the rate cuts. The implementation of reciprocal tariffs on April 2nd could take several forms. A comprehensive increase could worsen supply chain disruptions. Targeted sanctions may cause market turmoil, while a delay could ease pressure on risky assets. The Fed faces a tough decision. If core PCE exceeds 3%, rate cuts will be limited, but a rise in unemployment could prompt quick easing. The economic uncertainty, especially from weak consumer confidence and business activity, may influence the Fed's policy path, with the risk of a US recession increasing if labor market weakness continues. Now let's talk about the crude oil. So, uh, oil prices surged last week as new sanctions of Iran threatened to cut its crude exports by up to 1 million barrels per day. This marks the fourth round of sanctions since the US resumed its maximum pressure policy. Meanwhile, OPEC Plus announced that seven member countries will reduce output to compensate for past overproduction, with cuts ranging from 189,000 to 435,000 barrels per day per month until June 2026. However, eight other members plan to raise production from April, partially offsetting these cuts. Concerns remain over whether all members will fully comply with their commitments. Now, let's talk about everybody's favorite, which is gold. So the Trump administration, America First policy, and the global reciprocal tariff plan set for April 2 are expected to keep gold prices low as a safe haven asset in the short term. If the trade war intensifies, concerns about a global recession could lead to deeper corrections in stock markets, driving institutional investors to increase gold holdings for diversification. However, by the second half of the year, gold's investment demand may slow as tariff policies become clearer and the US economy avoids recession. Despite this, gold prices are unlikely to face a deep correction due to ongoing policy volatility and continued central bank gold buying.